Hey everybody, I hope you're doing good. If you have watched my videos before, you already know that I'm building a dividend growth portfolio. My approach is pretty simple. I find and analyze good dividend growth stocks, I share my research on here, then I buy these stocks and keep them over the long term. Per month, I add about 200 to 500 pounds, depending on what opportunities I see in the market. I also have a main portfolio in my ISA, where I buy index funds and gold. That's my safe, passive investing strategy, where I put most of my money. Picking stocks is a lot more fun though, and that's why I have this dividend portfolio. As of today, 9th of August, my dividend portfolio is worth around $16,400. I've lost about $1,455 since opening it because of 3 specific bad stock picks, but there we go. On the bright side, I am up 7.24% in the last 3 months, or about $1,129. Now, the dividend yield is 6.61%, coming to about $1,086. The important thing here is the dividend growth, which averages 8.3% per year. That's what's gonna make my dividend snowball, and that's what I want to focus on. If you want to take a closer look at my portfolio, check out the link below. Snowball Analytics is the name of the platform and it's incredibly useful to track your dividends. I started this portfolio a couple of years ago, but my up-to-date data is from the 4th of April, so I'm looking at this as my starting point. The cool thing here is that my dividend portfolio has actually done better than both the FTSE Global Index Fund and the S&P 500. If we take a look at the FTSE Global, we can see that my portfolio is ahead of it by about 4% since the 4th of April. And if we look at S&P 500, we can see that my portfolio is ahead by about 1%, which is really good to see. It has only been about 4 months though, and obviously my performance may get better or worse. Like I said though, I am focused on the long term. When you start investing, the general financial advisor recommendation is to give it at least 5 years. The longer your money is invested, the higher the chance you are going to make a profit. Of course, there's caveats, but that's the general rule of thumb for people like you and me. Now, let's look at my recent transactions. This month, I closed 2 small positions in PNC and Kroger, but they were very tiny. As you can see, they were just about $25 and $13, so absolutely tiny. On the flip side, my biggest purchases were AGNC at about $136, which got me roughly 13 shares. I also got 50 shares of Legal & General at a price of about £112.71. Innovative Industrial Properties is another stock that I bought, and I bought about $138 of it, or about 1.8 shares, and again that's already up about 7 or 8%. Enphase Energy also dipped, so I took the opportunity to buy about £150 worth of the stock. Unfortunately, I probably should have waited a bit longer. As we can see, it's already dipped by about 8%, but I personally think that Enphase Energy is a great stock for the long term, so I do want to build a long-term position in it. I've covered the stock a few times on my channel, and like I said, I think it has a great potential. Overall, I think that these 4 stocks are at a great price right now, and I think they offer a good risk-reward ratio, as they are. Obviously, Enphase Energy doesn't actually pay a dividend, but it's one of the growth stocks that I have the most conviction about. I also got a little bit of Realty Income, a little bit of Altria, a little bit of Airtel Africa over here, and the Yugi Corporation, which unfortunately hasn't done very well. But the good thing is that the position was absolutely tiny, just $10. So far, my biggest winners since I opened the portfolio are Arbor, Realty Trust, Innovative Industrial Properties, and Legal & General. Arbor's latest quarter was really good and the price jumped then. I think it actually hit somewhere around $18, but it has bounced back again. IIPR has been trading really low recently, but the company has started to recover and that's good. I've covered Innovative Industrial Properties a few times on the channel and it's a company in a good position in my opinion. There is a lot of FUD around it, but personally I think it's not warranted and the current price continues to offer good potential return. However, as I showed you at the start, my overall portfolio is currently down, and that's really because of 3 stocks: AGNC, Persimmon, and Direct Line Insurance Group. So if we take a look, actually Persimmon was one of my biggest losses at about $730. The other one was Direct Line Insurance Group, like I said, down $350, and AGNC is probably the worst one, down about $1,000 overall. Now, I made a big bet with AGNC and it backfired. In hindsight, I think that my investment thesis was wrong. I completely misunderstood the effect that the raising interest rates would have on agency and how the market would price that. Obviously, I lost a bit, but the good thing is that now I'm a lot more familiar with the market dynamics around agency. The bad thing is that I've obviously lost money on it, but US interest rates have almost peaked, and I do think that agency will stabilize going forward. As for persimmon and direct line, they dropped a lot because the management decided to skip a dividend. It's actually a smart decision, although I didn't expect it. Reducing expenses in these challenging times is good for the well-being of the company. The problem is that the price of dividend stocks is closely tied to their dividend. Shareholders were not happy to see the dividend stoppage, obviously, so the price fell off a cliff. Not great for existing shareholders, but it does give us a good opportunity. If and when persimmon and direct line resume their dividend, the price will rebound. Obviously, there's risk involved. Maybe they won't resume it, maybe they'll resume it, but with a smaller dividend. I personally think that they will continue to pay their usual dividend within a year, maybe two, which is why I continue to hold on to them. So, what do I plan to do in the next few months? Well, I think my portfolio is too concentrated in a few stocks and I want to diversify more. As you can see, the majority of my dividends comes from 3 companies: Arbor, agency and legal in general, and that's a risk that I need to manage. I also want more exposure to energy and base materials because I expect that they will see a lot of growth over the next few years. Copper and silver specifically have a very good bullish case right now. Plus, a few more solid dividend stocks will complement my portfolio well. I'm currently looking at IG Group, Airtel Africa, National Grid, Cisco and a few others. What about you? How's your dividend portfolio going? Which dividend stocks are you most happy with? Let me know in the comments, leave a like and share the video if you enjoyed it, and I'll see you again in the next one.